disclaimers are something I present to you the HOLT investment pitch of Visa and MasterCard. I'll start with the relative wealth chart. CFROI has consistently been above the discount rate for both companies, meaning they've both created wealth. Since 2008, both companies have enjoyed rising CFRO levels, perhaps due to increases in economic spending after the crisis, thereby facilitating more usage of the company's services. However, HOLT implies reinvestment from both companies as the reason, as we see from the increasing growth of margins and steady asset turns. For shareholder value, both companies must be commended on consistently outperforming the S&P 500 since 2010. However, MasterCard more so, with a better track record and higher level of total shareholder return as well as economic profit. Visa's change in economic profit is commendable as well. Visa's history in transaction CFROI is strong between 2013 and 16, showing pricing and operating skill as well as growth ability. For valuation with Visa, we see they are undervalued with a 5% upside based on the warranted price. Although there are many fluctuations over the year, 2017 has showed undervaluation. This may be because Visa has been repurchasing shares over 75 million in total, thereby increasing the shares and spread between the warranted and actual price. The market seems to have caught up in January 2018. From price tracking, we see a deviation figure of plus 1% indicating predictability. However, a firm bearish market would affect Visa rather heavily. Conversely, MasterCard shows a 43% upside based on the warranted price, showing an even bigger undervaluation and quite a consistent one too. Moreover, from price tracking, we see a 30% deduction figure indicating less predictability. MasterCard, however, will perform better in a firm bearish market. Furthermore, MasterCard has sustained a stronger HOLT economic PE over the last few years in comparison to Visa despite a smaller market cap, implying MasterCard has stronger management. This is also displayed in their level of asset efficiency in the asset turntable in comparison to Visa's, which has experienced a heavy drop since 2008. In looking at the future of investments, we start with CFROI. The HOLT framework expects both companies to begin their periods of fade. MasterCard's drop to 28.25 and Visa to 34.32 in 10 years' time. If we compute the effects of forecasted fade for CFROI into the flex valuation, we see for MasterCard the warranted price is plus 22% and for Visa plus 3%. In terms of momentum with MasterCard, we see consistent positive results in CFROI revisions and earnings prices. The chart shows MasterCard to have positive momentum. For Visa, we also see consistent positive results with CFROI revisions and earnings surprises. However, the results are not as strong as MasterCard. Despite higher earnings surprises, Visa are unable to eclipse MasterCard in absolute terms for price momentum. Both companies have strong risk profiles, low risk of default and strong credit metrics results for both companies. The only concerning figure is MasterCard's revenue recognition, which rates at 2 due to poor accrued expenses which have affected payables and receivables. This accounting issue could affect MasterCard in the future. Nevertheless, HOLT holds an overall score of 5 for them. To conclude, both have good investments as shown by the overall score. I would say investment in Visa is for more risk-seeking investors and would be lucrative in both long and short term. MasterCard is for more risk-averse investors and can also be good in the long and short term. It can be lucrative to both with huge undervaluation and upside potential. It will still perform well despite the fade forecast as we see in the flex valuation and will perform better in a bearish market. Furthermore, it has strong momentum. The recommendation also stems from the HOLT scorecard percentile of 92. Visa is also potentially a profitable investment, but I personally would recommend investing in MasterCard. Thank you for your consideration.